Welcome back to Investing Talk Podcast. Today, we're going to be looking at Viasat, ticker symbol VSAT,
Yeah,
a company that's been making headlines in the world of satellite communications and defense technology.
right.
Their stock has been on a bit of a roller coaster ride lately.
Sure
So
it has.
let's unpack what's driving those ups and downs and figure out if this is a company worth watching.
You hit the nail on the head. Viasat is operating in sectors that are absolutely booming right now.
Yeah.
Everyone's talking about the potential of satellite internet, especially with the limitations of traditional networks in those remote areas.
Yeah.
And the need for cutting-edge defense systems is only growing. But the question is, can Viasat turn that potential into consistent profits?
Well, their recent earnings reports have definitely given investors mixed signals. They started fiscal year 2025 strong, with a 44% revenue increase in Q1, reaching $1.13 billion.
Wow.
A lot of that was driven by their acquisition of Viasat.
Acquisitions can be a double-edged sword. On the one hand, they can give you access to new markets, technology, and customers. But on the other hand, they often come with integration challenges.
Right.
Unexpected costs and cultural clashes that can take time to sort out. It's
Yeah.
like trying to blend two different families. It takes time to adjust and find a new rhythm.
And it seems like Viasat has been experiencing some of those growing pains.
Yeah.
Even though they narrowed their net loss in Q1, which is a good sign, Q2 saw an 8.4% revenue dip to $1.12 billion. And their net loss actually widened to $137.6 million.
Oof.
That kind of inconsistency makes investors nervous.
It definitely raises a red flag. Is this just a temporary blip due to integration challenges, or are there deeper issues with Viasat's business model? To answer that, we need to look beyond the top-line numbers and dig into the details.
Okay, so let's dig. One positive sign is that even with the revenue dip in Q2, Viasat announced a whopping $1.3 billion in new contract wins,
Huge.
mostly in defense and aviation. That suggests there's strong demand for their services.
Big contract wins are always exciting, but we need to be careful about getting swept up in the hype. The key question is, how profitable are these contracts?
Right.
Are they long-term agreements with reliable revenue streams, or are they one-off deals with thin margins?
That's a really important point. It's not just about winning contracts, it's about winning the right contracts.
Exactly.
The ones that will drive sustainable, profitable growth.
Yeah.
And that's where some analysts are starting to express doubts. Barclays, for example, recently slashed their price target on Viasat from $24 to $9. That's a pretty dramatic drop.
Analyst opinions can have a huge impact on market sentiment, especially when they're as negative as this. That kind of downgrade from a major firm like Barclays can really spook investors, and it's likely contributed to Viasat's recent stock volatility.
It's been a wild ride, that's for sure. Since that last earnings report, Viasat stock has dropped 7.8% and even hit a 52-week low of $7.17 in November of 2024.
It seems like investors are struggling to reconcile those positive contract wins with the less-than-stellar financials and the increasingly skeptical outlook from analysts. They're caught in a tug-of-war between hope and doubt.
But there's a glimmer of hope. As of January 2nd, 2025, the stock closed at $9.54, showing some signs of life.
Okay.
And the increased trading volume suggests that more investors are paying attention, which could lead to some big price swings in either direction.
This is a classic example of a company at a crossroads. Viasat has a lot going for it. They're operating in exciting, high-growth sectors or winning major contracts, and there's clearly a lot of interest from investors. But they also face some serious hurdles, including those integration challenges, financial inconsistencies, and skeptical analysts. Which way they go from here is anyone's guess.
So how do we make sense of all these mixed signals? Technical analysis can sometimes give us clues about market sentiment and potential price movements, but even there, we're seeing more mixed messages.
Technical analysis is like reading tea leaves. It can offer insights, but it's not a crystal ball. It's all about patterns and probabilities, not guarantees. And with Viasat, the technical picture is as murky as the fundamentals.
For instance, the 50-day moving average is currently below the 200-day moving average.
Okay.
This basically means that the stock's recent performance has been weaker than its longer-term trend, which usually makes investors nervous and can signal further declines.
However, the Relative Strength Index, or RSI, sits at 43.76.
Right.
This means that the stock is neither overbought nor oversold. Think of it like a rubber band. It's stretched, but not to the breaking point. It could snap back in either direction depending on what happens next.
So it's a bit of a waiting game. What are some other technical indicators telling us?
Unfortunately, a lot of them are flashing warning signs. For instance, the moving average convergence divergence, or MED, is showing a bearish crossover. What this means is that the short-term momentum of the stock is weakening compared to the longer-term trend, another indication that selling pressure might continue. And other indicators like the Chaikin AD and Awesome Oscillator are also painting a somewhat pessimistic picture.
So even though the stock has shown some recent upward movement, the overall technical picture is still pretty cautious.
That's a fair assessment. The technical indicators are reflecting the uncertainty that surrounds Viasat right now. It's like investors are holding their breath, waiting to see if the company can deliver on its promises.
Okay, so we've got a lot of moving pieces here. Viasat is operating in high-demand sectors,
Yeah.
landing those big contracts, but also facing financial challenges, skeptical analysts, and some concerning technical indicators.
It's a real nail-biter. But that's what makes investing so fascinating, isn't it?
Right.
Trying to piece together these complex puzzles and figure out which companies are worth betting on.
Exactly. And a key part of that is understanding not just what happened, but WHY. So let's delve a little deeper into some of the specific factors influencing Viasat's performance.
Okay.
Starting with that Inmarsat acquisition. How has that impacted their financials and their overall strategy?
That's a great place to start. Mergers and acquisitions can be transformative, but they often come with a whole host of challenges that companies need to navigate carefully.
And with Viasat, it seems like those challenges have been pretty significant. We saw that initial revenue bump in Q1, but then things got a bit bumpy. What are some of the key hurdles they've faced trying to integrate Inmarsat into their operations?
One of the biggest challenges is often cultural differences. You're bringing together two companies with their own ways of doing things, their own systems, their own hierarchies. Trying to blend those smoothly can be a real art form.
It's like trying to make a cake with two different recipes. Sometimes it works out beautifully, but sometimes you end up with a real mess.
Exactly. And it seems like Viasat might have a few too many cooks in the kitchen.
No.
We've seen reports of internal conflicts, difficulties in streamlining operations, and perhaps even some clashes in strategic vision.
It makes sense. It's not just about technology, it's about people. Getting everyone on the same page working towards a shared goal is a huge undertaking, especially when you're dealing with two large, complex organizations.
Absolutely. And when you add in the complexities of operating in dynamic, fast-paced industries like satellite communications and defense, those challenges can become even more pronounced.
So how has Viasat been tackling these integration challenges? Have they shared any specific strategies or plans with investors?
They've talked about streamlining operations, reducing redundancies, and focusing on key growth areas. All of those sound good on paper.
Yeah.
But the question is, have those efforts produced tangible results?
That's the million-dollar question. And based on their recent financials, the jury's still out. We've seen some improvements in efficiency, but not enough to offset the revenue dip and the widening net loss.
Right.
So it seems like Viasat is still very much in the middle of this integration process. It's a work in progress, and investors are understandably cautious.
Exactly. They're looking for signs that Viasat has a clear plan, that they're executing it effectively, and that it's leading to sustainable, profitable growth. They want to see actions, not just words.
Okay, so we've talked about the challenges of the Inmarsat acquisition.
Yeah.
But let's shift gears and talk about the positives. Viasat is operating in some incredibly exciting sectors with huge potential for growth. What are some of the key market trends that are working in their favor?
One of the most significant trends is the exploding demand for broadband internet access, especially in remote and underserved areas where traditional terrestrial networks struggle to reach. Satellite internet is the key to bridging that digital divide.
It's like the final frontier of connectivity. Bringing high-speed internet to people in rural communities on airplanes, even in the middle of the ocean, it's mind-blowing.
It is, and Viasat is in a prime position to capitalize on this trend. They have a strong track record in satellite technology, and the Inmarsat acquisition has expanded their reach and capabilities even further.
So they're combining Viasat's technological expertise with Inmarsat's global network and established customer base. That sounds like a powerful combination.
It's a smart move on paper, at least.
Yeah.
And it's not just about connecting people, it's about connecting everything. The Internet of Things is exploding
Right.
with devices, vehicles, even entire industries communicating with each other wirelessly. Satellite communications will play a crucial role in making that happen.
That's right. We're talking about self-driving cars, smart cities, precision agriculture, all sorts of amazing innovations that rely on seamless, reliable connectivity. And Viasat is right in the thick of it.
They are, and they're not just focused on commercial applications. They're also a major player in the defense sector, which is another market with massive growth potential.
Especially with geopolitical tensions rising around the world.
Yeah.
Countries are investing heavily in their defense capabilities, including those advanced communication systems. And Viasat is one of the leading providers in that space.
Exactly. They're providing secure, resilient communication networks for military operations, intelligence gathering, and even space exploration. It's a very specialized market with high stakes, and Viasat has a proven track record in delivering mission-critical solutions.
So we're seeing this interesting dynamic with Viasat. On one hand, they're facing these significant challenges integrating Inmarsat and achieving consistent financial performance. But on the other hand, they're operating in these incredibly dynamic, high-growth markets with enormous potential for the future.
It's a classic case of potential versus execution. Viasat has all the right ingredients for success, but they need to show investors that they can turn that potential into tangible results.
And that's ultimately what will determine whether their stock price goes up, down, or sideways.
Exactly. Investors are looking for clarity, consistency, and evidence of a well-defined strategy that's leading to profitable growth.
All right, so we've covered a lot of ground here in part one. We've looked at Viasat's recent financial performance, the challenges of the Inmarsat acquisition, and the exciting market trends working in their favor. But we've also seen some mixed signals coming from the technical analysis, and there's still a lot more to unpack.
There is. Stay tuned for part 2 of our episode on Viasat, where we'll delve into some key developments that could have a major impact on the company's future. Welcome back to Investing Talk Podcast.
Now, before we jump into the next part of our analysis, I wanted to touch on something we briefly mentioned earlier, those market trends that are giving Viasat a real tailwind.
Right.
There's one development in particular that I think deserves a closer look, their recent announcement about reaching positive cash flow sooner than expected.
Ah, yes. That announcement on December 31st, 2024 was definitely a ray of sunshine in what has been a rather cloudy picture for Viasat. They're now projecting positive cash flow in the first half of 2025 instead of the second half.
Which is music to investors' ears. It suggests that they might be getting a handle on their costs, optimizing their operations, and perhaps even starting to see some positive results from the Inmarsat integration.
It's important to remember, though, that positive cash flow doesn't automatically mean profitability.
Right.
It basically means that more cash is coming into the company than going out. But it's definitely a sign of financial health and indicates that a company can fund its operations and growth without relying heavily on external financing.
Right. It's about generating more cash than you're spending, which gives you flexibility and makes you more resilient. So what's driving this shift towards positive cash flow for Viasat? Did they provide any specific details about their strategy?
They mentioned a reevaluation of their operating costs and capital allocation strategies. It sounds like they're taking a hard look at where they're spending money and making some tough decisions to prioritize efficiency and profitability.
Which is exactly what investors want to see. It demonstrates a willingness to adapt, to make difficult choices, and to focus on delivering value to shareholders.
And this move towards positive cash flow could be a game changer for the company. It could potentially boost investor confidence, attract new capital, and create a more stable platform for growth.
But actions speak louder than words. Investors will be watching closely to see if Viasat can actually deliver on this promise. What are some key things they should be looking for in the coming months to gauge their progress?
First and foremost, they'll want to see concrete evidence of cost reduction and improved efficiency in the upcoming earnings reports.
Okay.
Are their profit margins improving? Are they keeping their operating expenses under control?
Basically, are they putting their money where their mouth is?
Precisely.
Yeah.
And beyond the numbers, investors will also be looking for tangible signs of progress in the Inmarsat integration. Are they realizing those synergies they talked about? Are they streamlining operations and eliminating redundancies?
Because that integration is still a major wildcard for Viasat. If they can pull it off successfully, it could unlock a lot of value. But if they stumble, it could drag them down.
Absolutely. And finally, investors will want to see continued momentum in Viasat's core markets. Are they securing new contracts in satellite, internet, and defense? Are they expanding their customer base? Are they innovating and staying ahead of the competition?
Because at the end of the day, it all boils down to growth. Viasat needs to demonstrate that it can effectively capitalize on these favorable market trends and translate them into tangible revenue and earnings growth.
That's the crux of the matter. Positive cash flow is a significant step in the right direction, but it's only one piece of the puzzle. Investors want to see the whole picture come together harmoniously.
So to recap, Viasat is a company with a lot of potential, operating in high-growth markets, winning substantial contracts, and now forecasting positive cash flow earlier than anticipated.
Right.
But they're also grappling with some substantial challenges, like the complexities of the Inmarsat integration, skeptical analysts, and some concerning technical indicators.
It's a mixed bag, to put it mildly. But that's what makes investing so intriguing, isn't it? It's all about assessing the risks and rewards, doing your due diligence, and making well-informed decisions based on the best available information.
Absolutely. And that's what we aim to help you with. We've given you a lot to consider today, and we encourage you to conduct your own research, delve deeper into Viasat's story, and form your own conclusions.
Because ultimately, the decision of whether to invest in Viasat rests with you. But knowledge is power, and we hope this episode of Investing Talk podcast has equipped you with the insights you need to make a smart and informed choice.
And speaking of smart choices, if you're enjoying Investing Talk podcast, we'd love for you to subscribe. Share this episode with your fellow investors and leave us a comment with your thoughts on Viasat.
We always appreciate hearing from our listeners. And while you're at it, why not explore our other episodes? We cover a diverse range of companies and investment topics, always striving to deliver the most insightful and engaging analysis.
Now, before we conclude, I want to leave you with one final thought, something to ponder as you continue your exploration of Viasat. We've extensively discussed their financial performance, their strategic direction, market trends, and so on. But there's another crucial factor that often gets overlooked, but holds immense power.
I think I know where you're heading with this. It's the human element, right? The leadership, the culture, the vision that propels a company forward.
Exactly. Numbers can tell a story, but they don't always reveal the complete picture. So here's my challenge to you dig a little deeper into Viasat's leadership team. Who are these individuals? What's their track record? What's their vision for the company's future?
Because ultimately, it's people who make decisions, drive innovation, navigate challenges, and seize opportunities. A strong and visionary leadership team can be the decisive factor in a company's success.
And conversely, a leadership team that's out of touch, indecisive, or lacking in vision can lead a company astray, even if all the other pieces are in place.
It's analogous to a ship's captain. You can have the most technologically advanced vessel in the world, but if the captain lacks skill, experience, and decisiveness, you're in for a turbulent journey.
So as you evaluate the pros and cons of investing in Viasat, don't just focus on the balance sheet and income statement. Take a close look at the people at the helm. Do they inspire confidence? Do they have a clear and well-defined plan? Do they align with your values as an investor?
Because those intangible factors can often be the most critical. They can determine whether a company thrives or falters.
That's something to keep in mind as you continue your Viasat journey. Do your research, trust your instincts, and as always, invest wisely.
Thank you for joining us on Investing Talk podcast. We'll be back next week with another insightful exploration of the investment world. Until then, happy investing.
And that's exactly what we try to do here at Investing Talk podcast, equip you with the knowledge and insights to make informed decisions.
Absolutely.
So remember to subscribe. Share this episode with anyone who might find it useful. And leave us a comment with your thoughts on Viasat. We love hearing from our listeners.
We do.
And if you're looking for more deep dives into the world of investing, be sure to check out our other episodes.
Yeah.
We cover a wide range of companies and sectors, always with the goal of providing you with the most insightful and actionable analysis.
That's right.
Okay, before we sign off, I want to circle back to something we touched on earlier.
Okay.
That announcement from Viasat about potentially hitting positive cash flow sooner than expected.
Yeah.
It definitely caught my attention
Yeah.
and got me thinking about the potential turning points for this company.
Yes. That announcement on December 31st, 2024 was significant, especially considering the challenges Viasat has faced recently.
Right.
Projecting positive cash flow in the first half of 2025 instead of the second half is a much more optimistic outlook.
I'm curious what specifically makes you think this could be a turning point for them. Is it simply the improved financials, or is there something more to it?
It's a combination of factors. The positive cash flow projection is a strong indicator that they're gaining control of their costs and becoming more efficient.
Right.
But what's even more encouraging is that this shift seems to be driven by a strategic reevaluation of their operations.
So they're not just cutting costs across the board. They're making deliberate choices about where to invest their resources.
Exactly. It sounds like they're taking a hard look at their spending, prioritizing profitability over growth at all costs, and focusing on the areas where they have a clear competitive advantage.
That's a smart approach, especially in a market as dynamic and competitive as satellite communications. What I'm hearing is that this move towards positive cash flow isn't just about the numbers.
It's not.
It's a sign of a deeper shift in Viasat's mindset.
Yeah.
A move towards sustainability and long-term value creation.
Precisely. And that shift in mindset is what could really make a difference.
Right.
It's about moving beyond the hype of big contracts and focusing on building a solid foundation for the future.
So it's not just about surviving the next quarter. It's about thriving in the years to come.
Exactly. And that's the message investors will be looking for from Viasat. Can they translate this newfound focus on efficiency and profitability into sustained growth and market leadership?
Only time will tell. But one thing's for sure, this is a company worth keeping an eye on. The stakes are high, the challenges are real, but the potential rewards are significant.
It's a fascinating story that's still unfolding, and we'll be here to help you make sense of it every step of the way. Thanks for joining us on Investing Talk Podcast.
And remember to subscribe, share, and leave us a comment. Until next time, happy investing.